100 seconds of trading. My name is Alejandro Zambrano, Chief Market Analyst with Amana Capital, and we should be live right now. Just let me verify that we are, and then we're gonna go ahead with today's presentation. Okay, good. So I can see that we are live. So guys, thank you so much for joining me today at the live trading room here at Londinium FX. Monday to Friday at 9 a.m. London time, we provide you guys with this quick update on the markets. We're going to take a look at markets such as Eurodollar, Bitcoin, gold, German DAX 30, and crude oil. These are in essence the most popularly traded markets in the world. Now, before we begin, as always, I need to stress that trading financial markets is unfortunately risky. There's a risk that we'll lose more than our invested money, and this usually comes from the fact that we're trading with leverage. At least that's what most people do. They trade with a broker that provides them with leverage, and because people trade with the leverage, they can actually lose more than they're invested. Now, if you're totally new to this, you're not familiar with the risks involved in financial markets, then do read the risk disclosure, and if long time ago you did it, then read it again. It's really important that you're fully aware of the risks involved when trading. Now, let's begin. So this is the euro versus the USD, and you might remember I was bearish over the last few days, and we talked about selling up here for this to go down, and the first time it worked out good. There was a decline of about 95 pip, and then we have another very similar decline here to the downside. Now yesterday I said that people could potentially start to sell around, I think I said 1784, and that as long as you're trading below this level up here, which was pretty much the 30 level, will be bearish. And as you can see here, the market moved against us, and the market is now heading up higher, and we ended the little short-term downtrend here. So because of that, it doesn't make any sense to remain short, and as you can see here, if we would have kept that position, then would have been down with another 15 pip if we would have maintained that. Now going forward, what's next here for the euro? Well, I want to give this a day or two to figure things out by itself. I don't really want to get involved right now. Now I know we are heading straight into 1862, which is this high here. If we take this out, I think we can go up to maybe 119, and then when we usually take out a set of highs, the market just continues to the next resistance level, which is here at 120. So if we take out 1862, this market could potentially head up. But what I would like to see, I would like to see this push up, maybe closer on 119, and then maybe on Friday or Monday, when and if the market pulls back down to maybe 1820 or so, looking to go along here with most likely a stop loss at 1710. So we'll risk about 100 pip, and if the market indeed moves up to 119.50, could potentially make 123 pip. But the reason why I'm not doing that today, because I'm not sure how the market is going to react if we take out this high. Because if we don't take out this high, this market could just go up a little bit and down, and then just head down lower. Here's the price of Bitcoin, and Bitcoin is surprisingly been a little bit quiet this week, and you have a bullish trend above this low, which is 74.14. You can see it's a bullish trend because prices on this 4-hour chart creating higher and higher and higher lows, so we want to go with that momentum, and the trend is bullish about 74.14, which is the last important low. You have obviously other set of lows here, but a trick being a trader and an investor is knowing which low is important. So I'm going to remain bullish, and from a risk to reward ratio perspective, I suspect traders would prefer going long around 79.03. Why? Because here they'll risk 6.19%. Versus a potential gain here if we just move up to the high is 6.4. So it's a balanced risk versus the reward. But if this market continues to head up higher and hits this R1 level, which is the R1 level of the pivot point indicator set up on the weekly, then they could potentially make 11.17. So that's a better deal, right? you almost make 2 times what you're risking, and that's a positive risk reward ratio, and that's usually what most traders look for. So if we go down to 1703, I think traders could go long here just because we're close to the key level and support, and the risk reward ratio is going to be favorable. The alternative, which wouldn't also surprise me, which we know Bitcoin is really keen on breakouts, is that if we take out this high, which is 8,400, you could potentially push towards the 87, 86 level up here. Here's your price of gold. Now gold is moving up again. So it's trading, took out this resistance level here and tried to push higher against this high here. I don't have a strong view, but you can see that we have some sort of a bullish momentum. And I'm careful here because I don't actually believe that this is going to head substantially higher. So in essence, actually myself, I just want to wait. So you have resistance here, obviously take out this level, which is 1297. Then we might push towards the next resistance level, which is 1305, or the R1 here at 1303. And there is some bullish bias to it. So if you are bullish, then I suspect traders are going along here at 1282-ish. But I don't really trust this because it breaks up strongly one day and then it tumbles, then it goes up, and then might tumble again. So I want to give this some time to figure out what it wants to do. Here's the German DAX. So the German DAX is, as you know, a very volatile and brutal thing to trade. Now the market is trying to bottom out as we're approaching the support level, and I turned bullish yesterday. Why? Because price was creating lower and lower and lower and lower and lower highs. However, on the 21st, the price took out the high, so it triggered the end of the downtrend, moved up, and now it pushed back down lower again. And I suspect, that as long as you trade above 12,850, that this market could move up to the high, take out this high, then we could potentially head to 13,342, which is up here. The next market we're going to cover is the price of crude oil. The trend is bullish above 54.79 and 55.73, which is this low here. Has some really good setups here over the last few days. We said look to go long here for this to head up. Worked out perfectly. Here's the fib. Take fib from this low to this high, and you'll see that you'll have these three levels. First one being 57.21, followed by 56.92 and 56.64. Now around here, say a 50% pullback level, prior highs, a little bit of support down here. I suspect the market could look to bounce from. So I'm bullish, but not from these levels. I was bullish down here, not up here. Here's the level to book profits. So I suspect if we go down, traders are gonna look at this as an opportunity to go with the flow. You can see the 4-day EMA and the 15-day EMA is all pushing up higher. And I suspect we can go up, maybe up to 58.50, and we should have a major high at 56.48. You can see here we spent quite a lot of time here between May and July 2015. It's a big band of just resistance, and I suspect that it's going to be really difficult to take this out, but we can push and be bullish towards this level. And then obviously when things starts to trade sideways, we just need to start to get ready for that. But for now, this is as clear as an uptrend as it can be. After hitting a low here at 52.12, sorry, the market has risen on 37%, which is really good. Now we're gonna finish up. Actually, we have 60 seconds left. Let's just quickly take a look at the economic calendar. It should be relatively empty because it's Thanksgiving in the US. GDP numbers out in 20 minutes. From the UK versus forward, if the numbers are higher than expected, it's bullish. If it's lower than expected, then it's bad. ECB monetary policy meetings, accounts out today as well. Can easily influence the euro, and I think that's pretty much it, unless you want to trade the Canadian dollar. Now, something you don't want to miss today is this. We are having an introduction to Bitcoin trading and blockchain. And blockchain is the technology behind cryptocurrencies such as Bitcoin. So we'll introduce you guys to that topic. It's good if you want to know more what the fuss is all about. We'll also talk about it, the advantages and the disadvantages of trading with CFDs if you want to trade Bitcoin. At the same time, we'll also discuss the problems with the trading it directly from an exchange. And that will be if you want to buy coins directly from an exchange. It's very straightforward. Just click here or click here at Education Webinars to sign in and read more about this. I'll see you guys tomorrow for yet another update of the markets. Have a great day. And don't forget to like and follow us on YouTube. The more you share, the more we care. Thanks.